Morning everybody, it's Chris here from Serene Education with the continuation of the 4 majors analysis for the 14th of September. I've got sterling against the US dollar up, and I'm just going to have a look at the daily time frame. This is on our CTC strategy template, mind you, on Metastock Pro. Okay, what do we have? Well, yesterday a failure yet again to break this very strong resistance level with the 20 period and the 50 period moving averages in cahoots here. So very strong area here, and subsequently failure to do so yesterday meant that we would see a consolidation or a further downside movement. And Asian market open, we saw it open slightly higher, and we are now in a down trend as we speak. So where is it likely to go to? Well, retest of 1535 by the looks of things, and we've been here before, and how many times? Sheesh, so many times, it's frightening. Very strong support area here. This candle here on the 7th tried to but failed to break lower, and subsequently what we had was an exhaustion candle to the downside, and subsequently we saw a buying opportunity the following day. But what we're doing is now we're ranging between literally 1550 and 1535. So we're in a sell market at the moment now. It has to break lower and close lower than this area here, otherwise we're just going to have it going backwards and forwards along this period. And to be honest with you, if you're doing intraday trading, yeah, you might be able to scalp a bit, but those long-term traders, oof, what an absolute pain in the backside, because you're not making any money while the pair is going sideways. Let's have a look at intraday. Well, saw a bit of selling this morning just after 6 a.m. GMT time. Selling opportunity here. You can see how the 200 period moving average was acting as a resistance level, and failure to break through the 1541 area gave us an indication that, well, we were going to see possible move to the downside. And what you normally do, what I tend to do when I first wake up, is to see the high and low of the Asian market trade range, and it would be that. Okay, so I just draw a nice big box around it, so I can just box it. And I say to myself, listen here, if this is to be either, i.e. we're in a bear trend, so we've got to look for bearish opportunities, we have to see a break to the downside to confirm that. Okay, if that breaks through, where would be my first target? First target would be the previous low in the setup, would be here at 1537. So what have you got? 5, 10, 15, 20 pips already in that. Well, take away your spread, so you're breaking maybe 15 pips max. But that would be your first target. You have to see the breakout confirmed. Yes, confirmed. We're in a downtrend. Fantastic break. Moving average crossover. 200 period moving above. That would be an entry level. What happens? You enter on the next candle. You get a pullback and a continuation down. It's your typical trade range breakout pattern. Breakout, confirmation, and continuation of the confirmation signal. So what's happening now is we're trading below 1537. It needs to be trading below that in order to still remain bearish. Okay. Let's see, from that move to here, 38.2 is back up here, and 50% of that move is here, so be aware of that. Pullbacks. Okay, so what do we have? Yeah, as long as it stays, here's a 15 minutes, as long as it stays below 1538, we're going to see a continuation to the downside because of that breakout. Okay, we want it to stay below that level in order to still consider this as a bear move today. Okay, so on a 15 minutes, we've got our sell signal, we're short. 5 minutes sell, we're short. 30 minutes, we've got our sell, we're short across the board. Okay, be aware though, we're coming up to all-time low, which you saw on the 10th at 1534. Okay, we might see a consolidation, and we're seeing that right now before it's bit of a pullback, which is this area here that we're seeing now, guys. Okay, so this very strong resistance area now, sorry, support area. Just be aware of that. So we might see a bit of pullback. It has to break lower than that level there to be considered still bearish. Okay, so we could see a bit of, you can see how messy it is on an hourly chart. You don't want to be trading the mess. You want to be trading the breakout of that mess, the first thing you see each morning, which would be brilliant. So failure to break lower than 1534, we won't see it rolling down to 1530, which is an all-time low.